This last week was a crazy one to say the least. We saw equity indices just plummeting. We saw the VIX go up. Currencies went all directions. It was really crazy. So I want to go over how I profited from the week and maybe share some opportunities that we can go ahead and take advantage of again, because we saw some pretty nice pullback opportunities on Friday. So before we look at any charts, I always emphasize that it's really important to go over the fundamentals of the market, because that is what drives the market ultimately. And then we can go ahead and, once we get a bias, look into the technicals, find some levels that we can take some entries on, solidify our risk, and then go from there. So last week was really crazy. So tariffs happened, right? On April 2nd, Trump went ahead and announced tariff plans that he had. Originally, the market rallied on April 2nd. So he went ahead and said that we're going to do a 10% baseline tariff on every country. And the markets got a little bit happy and they started to rally a little bit. Because the 10% baseline was better than expected. We were seeing, prior to this, we were seeing him hitting Mexico and Canada with 25% and China 10%. So the fact that he went ahead and said 10% on everyone, the market said, okay, it's not going to be that bad. And then he went ahead and pulled out this whiteboard with all the countries and all the imposed tariffs that they have on us. And he went ahead and added a essentially 50% discount reciprocal tariffs to the country. So if a country was taxing us 50%, he went ahead and added an extra 25% to them on top of the 10%. And as soon as that happened, market went ahead and took a dive for the worst. Uncertainty came back, VIX popped up, market sold off. So that is basically why the move happened. And so now I want to go ahead and see what we can do, because Friday non-farm payroll numbers came out better than expected for the U.S. Even though the previous print was revised downwards, the market still kind of saw a little bit of strength. So we got some pullbacks into some key zones, and we can potentially, if the fundamentals and the uncertainty is pretty much the same and there's no settlements over the weekend, could go ahead and double dip into these opportunities and continue riding the wave. So looking at the New Zealand dollar, we saw some strength in the New Zealand dollar, strength in the euro, the Aussie, the pound dollar, and then we got some selling in the dollar, Swiss dollar, CAD dollar, yen. Now, we see the strength in these things, but if we pull up a chart, it's going to tell you otherwise. You're going to see New Zealand dollar, euro dollar, Australian dollar pulling back, because that's what happened. We saw Aussie dollar took a 5% hit, New Zealand dollar took a 4.5% hit, I believe, for the day on Friday. So there's some pullback opportunities that we can probably take advantage of, but we got to be careful, because let's say if you're going long New Zealand, euro, Aussie, pound, and you're going short dollar, CAD dollar, Swiss dollar, yen, you got a little bit of a correlation risk there. So you just got to pick one of the two or two of those that you like the best, and then go there. I like that. Let's go ahead and see COT positioning here. SPX saw some buying, NASDAQ saw some buying. Now, we got to remember, COT is a lagging indicator, so you get Tuesday's data on Friday. So we're about a couple days behind. So this is not really aligning with the chart. Like pound, euro saw some selling, 2% selling on the euro, 2.8% on the pound. But their net positioning is ultimately, at the end of the day, stronger than the US dollar. And that's why I would still consider buying euro dollar and shorting something like dollar Swiss or dollar yen. Before we go into the charts and look at some opportunities, I want to kind of re-emphasize or remind ourselves, and myself too, the environment that we're in. So we're in a very risk-off environment. So things like the yen and the Swiss are going to thrive because those are safe haven currencies. Now, usually when there's conflict or war or trade wars or whatever, the dollar is usually a very good safe haven. But because we're the aggressor, we're the ones that's heavily involved, we're the reason for all this, then that's why it's better to go ahead and go with something like the yen or the Swiss as safe haven currencies, and those are the more in-play trades to take. Now, out of the yen and Swiss, I prefer the Swiss more because they're very neutral in terms of geopolitics. They don't get involved in any conflict, and 25% of their outstanding Swiss currency is backed by gold, which is very good. You see, gold also performs really well in these environments. So the fact that that country is a very neutral country when it comes to conflict, and 25% is backed by a very safe asset, that makes it more in play. And you can see the flows on the chart. As soon as these things happened, the Swiss yen went ahead and appreciated. So, referencing the chart, you can see dollar yen really took a dive. So we'll go into that right now. So let's go ahead and start with the dollar. The dollar obviously got some sell off. And if you kind of look at this in hindsight, right, head and shoulders pattern on a technical basis, it was a really good trade to take if you were selling dollar once it broke this level. But we can see that now this could probably potentially turn into resistance. And if we kind of go down to something like the 4 hour, then on Friday when NFP came out, dollar went ahead and went back up, and now we're at this zone, resistance zone potentially. And that's what I mean by getting another opportunity to go ahead and double dip in this move. If there's still uncertainty and the tariffs are still as dangerous as the market thinks, then we can continue some inflows and more inflows to safe havens like the yen and the Swiss, causing this thing to drop a little bit more. It was a trade that I took last week, and I'll go ahead and just dive into it. I entered here, pulled out here, and now we have another opportunity to enter here. I want to see if this level holds, right? But this trade was a good one. I got stopped out. I was trading my stop, so I eventually got out like around the 295 pips, which is pretty decent. And now I want to see if we can ride the wave, and ultimately I want to go for the 112 handle. That's a level before that has been respected a lot, so we can find ways to get up there. That's another 200 pips that we can take. I'll gladly take that. And so on the technical basis, what I'm looking for, I want to see this hold. I don't want to see anything come below here. If we take a stab below, then there's a chance that we could go ahead and drop more and then buy here. If we buy here, then our risk to reward becomes even better, because now you can put your stop somewhere in this level here, and then your take profit can be somewhere over here. So that's what I would look for for the euro dollar. Dollar Swiss is my preferred one if I'm going to short again. Similar, we pulled back. I got stopped out right here. I was trading profit, and I want to go ahead and potentially try this. If we can hold this thing again, then I'll go ahead and go short on that market. Like similar to the euro dollar, I'll go in pretty light here because I already have profits. There's no need to go ahead and go heavy if we have all this room up here that we can go back into. So if we go back into this zone, then I'll probably try again, sell right here, and my take profit would be either right here or right here. I could honestly probably do three take profits. I could probably take off a little bit here, take off more here, and then ultimately right here. And then I'll go over this right here. We're in a big range. So this trend pretty much started over here. This is just a big range that we're in. So before we've hit this level, come back here. Then we went right back up to this level again, came back here. Went up to this level again, and so this is the target right here. If we get this target, then I'm happy. Then we gotta keep in mind of the fundamental picture. If there's still uncertainty, nothing gets resolved, then we could go ahead and start making new lows, and the trend can shift. I don't think so. I think this is going to be one of those things where eventually people are going to negotiate deals, because it's in everyone's best interest at this point. No one wants to be paying a lot of tariffs, so I think pretty soon, within the next couple weeks or maybe months, we could see some deals being made as far as tariff trade, and we can kind of just hit this level and just continue in this range, right? Maybe if we get up here and the fundamental outlook changes, then we could start buying here and then ride the wave to an important level like this. And then if we break this, then we go back even more. So it just depends, right? That's why the fundamentals are so important. I truly believe that fundamentals move the market. Like, I can understand why people would make this trade like off of a head and shoulders, but this whole move, right? This is a very lucrative move. 340 pips, 350 pips. This is all because of the fundamentals. So it's really important to go ahead and keep those in mind. That's my outlook for the week. My euro position went well last week, and my dollar yen also did really well. So this week I'm going to take a light stance. I'm going to try to enter the market if those levels holds with a light position, with the awareness that we could retrace a little bit deeper and then try there. Thank you for watching. Please be mindful and safe in this environment. With a high VIX, there is a lot of volatility to come, especially if tensions do not come down. Then it can be really hard to trade. So thank you and have a good weekend. Happy trading. Bye-bye.